Hey guys, Brian Stevens here with the National Real Estate Post. I have Chris Martin, who's the co-CEO of Oak Tree Funding today, and we're going to be talking a heck of a lot about non-QM, which is the biggest growing section of the mortgage industry right now. So Chris, how you doing?
Good, man. Beautiful day in Arizona. High today, 68 degrees. So I'll take it.
Yeah, let's have a conversation in July.
Right. No.
So, hey, listen, why non-QM?
The way the market's moving, interest rates are going up across the board. Obviously, Fannie and Freddie rates are going up. Non-QM delivers an opportunity for you to help those people who are underserved. We have there's great programs out there for self-employed borrowers who have been underserved for many, many years. Investors are still looking to pick up investment properties and be able to finance them at very, very good terms, very good interest rates. We're able to do things that conforming lenders aren't able to do. Non-QM, higher loan amounts, interest-only programs. We can qualify just using the subject property's income. So there's a lot of different reasons why somebody would want to be doing, a non-QM today.
So how have you seen your business over the past couple of months? Has it been increasing?
We have definitely been increasing our business. Our submissions are going up. We're getting a lot more, talking to a lot more people, brokers. They've been invested in their existing client base, which they absolutely should. When rates are low, they should be going after the lower hanging fruit, the borrowers that they had 4, 5, 6% interest rates that they put them in, a few years back, and they should call those people first and refi them and get them lower rates before somebody else does. So I no blame put on the brokers in any way, shape, or form. They should absolutely be going after that business. However, as rates start to move up, you can go back to start looking at some of those customers that you might not have paid as close attention to because you were worried about, getting as many of your refinances done as possible. So a lot of people looking for a lot of self-employed borrowers looking for different types of loans, investors that you may not have had time for. Learning non-QM is a whole different process. It's different than FHA, it's different than VA, it's different than USDA, and it's a new program. If you're not used to it, it's a little bit of a different mix-up. We can do manual underwriting. We can make exceptions. So if our guideline says X, it doesn't mean that that's the end-all be-all. We have a lot of things we can do with compensating factors. You don't have to just get the loan done, and if it meets DU guidelines or meets LP guidelines, then we can still do it. We can still make tweaks. We can still make exceptions if it doesn't quite meet our guidelines exactly.
That's interesting because I was just reading an article right before we got on this interview about manual underwrites and how non-QM is doing manual underwrites. If you're going with your agency, meat and potato type of lenders, you're going to go into an automated underwriting system, and that's going to spit something out, and that's going to be the final decision.
Yep.
So can you just expand on that a little bit about the fact that you guys are still manually underwriting and the benefits of that?
Yeah. Well, we actually have, ironically enough, we have and leverage an automated underwriting system to help clients kind of get pointed in the right direction. Now, our underwriters always manually underwrite the loans. They reference the AUS to make sure that helps it with the credit score. But again, as we all know, it's garbage in, garbage out. But most of the time, you get a borrower, let's say that our guidelines have a requirement of 6 months reserves for a loan over $1 million. And your client has 4 months reserves. Well, it might not approve it in the automated system, but we could certainly take a look at that and, hey, they've been on their job for 5 years. They have X number of equity in the subject property. They've been in the house a long time. They have good residual income. Hey, we're going to make that exception for that borrower. We can do with as little as 3 months sometimes. So it just depends on their circumstance and their situation. But our underwriters are looking at the loan case by case, detail by detail. And with non-QM, which is what I love about this business, is that not every borrower is the same. Not every loan is the same. Not every deal is the exact same. Not everything's cookie cutter. There's always something unique. There's always something special about their situation. And we want to do whatever we can to help those people out.
So I was reading a couple articles again in order to get prepared for our conversation. The other one that came out that struck me as a little bit odd is somebody was blogging about the turn times with non-QM, and it's like, be prepared for longer turn times with non-QM. You're going to get stuck in underwriting hell. Can we talk about that?
That depends. With us at Oak Tree, we have certainly, as volume increases, we're going to get hit with situations where we're going to have longer turn times because, just as you mentioned, every loan is being manually underwritten. It's not DU, it's not cookie cutter. We've done a few things to bifurcate the process. We actually have a whole separate dedicated appraisal department that once your appraisal gets in, it gets sent up to our appraisal review team. They review the appraisal. It takes one thing off our underwriter's plate. We're in the process of working on a full-fledged income desk so that you can send in your borrower's bank statements. We can get those calculated. And then short of, there might be some conditions with it, but short of them, not meeting one of those conditions that the underwriter sees with the bank statements, we're going to be able to leverage that income throughout the loan process. It's coming out in the next month or so. In addition to that, we've hired several underwriters. Every single point of contact or every single loan that comes in, you have 4 separate points of contact, 4 separate people that are working on your loan for you at Oaktree. So you have your account executive, you have an account manager, you have obviously the underwriter, and then you also have a closing specialist or a condition specialist that works to, as the loan process gets closer to the end, or as your close of escrow starts to approach quickly, they pull those loans out and identify them and get them cleared to close as fast as possible. So we try and alleviate that. When NonQM first started back in 2013, 2014, it was long turn times. Everything had to be second reviewed. Everything had to be looked at multiple times. And, at Oaktree, we try and recognize that. One of our mottos is the relentless pursuit of perfection, understanding that we're never going to be perfect, but we're going to try to do our best. So if you had a bad experience on one loan because the turn times went long, or whatever the case might be, we want to make sure that the next loan goes through as quickly and as efficiently as possible. We've had situations where clients have had issues, close of escrow dates. The other problem is that we get loans from people who have been turned down before at other lenders. So let's say they went to their bank and applied for a jumbo loan and they just didn't meet the requirements. So now you're 15 days into a 30 or 45 day close of escrow, and you're just now coming to us and getting underwritten approval. And then the customer doesn't want to pay for an appraisal because they got turned down before. So they want to wait till their loan's approved and then they pay for the appraisal. So sometimes we don't get the loan first. If you have a customer that's on the border, you're not 100% sure, call one of our account executives and talk to them, because they can help you structure that deal. They can help you make sure that your loan comes in, that you've got, that you've got a pre-approval, that they can help you with the income. They can tell you what the shortcomings are of the deal. If you let them know up front, hey, this is what the issues are, they can actually go to underwriting and go to secondary and get an approval for whatever those concerns are, so that when it does go to underwriting, it flies right through.
Yeah, the other thing is, there's an assumption that with non-QM, you're dealing with a higher risk loan, which we know is not necessarily the case. You were saying, what is your average credit score?
Our average FICO score is right now it's about 735. Is our last look. Our average loan to value is less than 75%, and historically, our average loan size has been well in excess of $700,000.
So you're not dealing with high risk borrowers in general. I mean, you will go down into this mid or low 600s.
Yeah, we go down to 600 FICO. Okay. We go as low as 600 FICO. Not at that FICO score, but we'll go as high as 95% loan to value. So we do cover the spectrum as far as what we'll do on an owner occupied loan, but no, we're not. By and large, these are not as risky loans as, say, the subprime days.
Right. And we had a conversation last month where you guys dropped your rates on all your products across the board. Yep. Just as there's an assumption that with non-QM, you're going to get a higher interest rate. And right now, in some cases, isn't it correct that you might even get a better rate on some, especially your jumbo products, if you're going non-QM with you?
If jumbo loans, our rates on we call our titanium program. You could do a 40-year interest only with a starting rate at 2.99%.
Wow.
And that's a fixed rate. There's still jumbo rates that are now in, over 3% range. If you're on an investment property program, we have a non-agency, but we accept conforming guidelines investment property program. Many times those priced out even better than our standard Fannie and Freddie investment properties. So that we have a lot of different programs that are as good as, if not better than Fannie as far as interest rates go.
Well, when you start looking at your investment properties right now, Fannie and Freddie, many lenders have, so many overlays on those things that it would certainly be better to go to Oaktree than to, one of the lenders that you're working with right now, or at least give it a shot. Yeah. Now, how could somebody get in touch with you?
The easiest way to do that is to go to our website. You can either go to nonqmexpert.com or you can go to oaktreewholesale.com. It lands you in the same place. You can click on a link and start your broker package approval if you've not been approved with us, or you can call us. You can email us at contact@oaktreefunding.com.
Sounds good. Chris, you have a great day.
Thank you. You too.
All right.